It's Tuesday, first day of the Fed meeting, but today we're looking at the retail consumer and retail sales data that we got out at 7:30 this morning. Now, there's been concerns about the retail consumer because we've been getting mixed signals. Now, a couple days ago, we got the Bank of America consumer checkpoint, which showed good card spending for the month of August, up 0.4, after being up 0.4 in June and up 0.6 in July. The lower, the retail spend was up 0.5%, and the services spending was up 0.3. This is the Bank of America data. The lower income spender up 0.3, and the higher income spender up 2.2%. That's a good positive number. Then we got Jamie Dimon's comments a few days ago that he feels the U.S. economy is weakening with the uncertainty about whether it will lead to a recession. This was because of the downward revision in U.S. job numbers and the decrease in consumer sentiment. Not as hard of data, but a interpretation of the past data. Okay, that's fine. Jamie Dimon tends to lean that way sometimes. He plays a lot of a risk manager. Now, today, we get retail sales data. And retail sales data comes out up 0.6, much better than expected. When we look at X vehicles, up 0.7, and X vehicles and gas, up 0.7. So big beats across the board from the retail sales data that we get from the Census Bureau. Now, within that retail sales data, we saw non-store retailers, also known as e-commerce, up 1.2% and up 10.1% year over year. Food, service, drinking places, up 1.8% and 6.5% year over year. So, we got good economic data from the Bank of America consumer checkpoint. We got questionable interpretation of the data from Jamie Dimon, and then a confirmation of Bank of America's data when we got retail sales today. Now, the one thing that happened, yields climbed slightly, right? Stronger U.S. economy, stronger U.S. consumer. So what does that mean for rate cuts? Probably 25 basis points. Let's see if it's a hawkish or a dovish raise, because the SEP that we'll get and Jerome Powell's press conference will certainly affect the markets going forward.